Okay, this is just a quick video. The question was asked, what do you mean by the backside of a move? Normally, when you're talking about the backside of the move, it's because the stock has gone parabolic. And just, I'll explain it in a second, but it's gone parabolic, and then it spikes up, and then the next candle's red, and off it comes, and, comes down as quickly as it goes up. This is what we call the backside of the move. This is the front side of the move, and this is the back side of the move. We never want to short stocks at the front side of the move. We always look into short stocks on the back side. Normally, there are guys out there. You'll see them, and girls. Not trying to be sexist, but you'll see them talk about and post it on Twitter how much they made millions of dollars or hundreds of thousands shorting a stock. On the front side of the move. But normally what happens in that, and here's why, I'll show you. You can see here in this case, this stock was started to go up, and it started to, because of the chart, started to go parabolic. With this, you wouldn't see this, but if it was in the, take that out of the picture, you would see that this looks like the stock starting to go parabolic. And then it starts to pull back, and you get people shorting stock just because it's up. And especially new traders quite often will short a stock just because it's up. And they get heavy shorts into this thing, and there's something going on. It's a thin float, whatever. All of a sudden it breaks out of that wedge and starts to pop. Now all the shorts are scrambling to cover. And that's why you get parabolic moves, is because people are getting bought in, they're getting margin calls, and they just have to buy at any price. Eventually, though, all the shorts do cover, and the trader, he's not buying this anymore. He's selling into it, and the shorts and the people that have huge accounts that can afford to hold the position and short it, know that this is going to come back down. They stay in the trade, and then it comes back down. And this candle like this is a typical top of the market in a parabolic move like that. But you still don't want to short this. Where you want to short it is in here when it starts to break down, and maybe in these pops. You might miss some of the big move, but I'm just talking about mere mortals like us. I'm not talking about the top traders in the world. They're shorting this. They got big books. They short it all the way up and they short it all the way down, and then they cover in here. Just as an anecdote to that, I had a friend of mine was a big broker in Vancouver, and this was in the 80s. And that's all he did was he shorted. He had big clients, and they shorted this stock called International Corona. And it was promoted by a guy named Murray Pezim. And Murray Pezim was the quintessential stock promoter in the 70s and 80s and 90s. And so they promoted the heck out of the stock, and all the big traders were shorting it because they knew that highly unlikely that Murray would ever find anything. Well, it turns out they make a huge gold discovery. Now, there's a few different phases to a gold discovery. There's the action where they might find something that takes it up, and then there's the gold discovery, which absolutely skyrockets the stock. But then there's a long time between making the discovery and actually turning it into a mine, and the stock comes back. Anyways, these guys, my friend and his clients, they were shorting the stock at around $4 and $5, and it ran to 30, and they just kept shorting all the way up because they had a huge book, and they bet that Murray was out of stock, because that's what stock promoters do. They know they're not going to find anything, so they're selling the stock all the way up. But then they make this discovery. So they knew that Murray knew this, or they knew that Murray probably was out of his stock. So they shorted all the way up, and they could ride it up, and they rode it back down to 50 cents, ran to 30. They stayed with it. They covered it at 50 cents because they knew then, and bought action went long because they knew then that Murray would be down here financing, replacing his position that he'd sold all the stock. So unless you can afford to take that ride, you don't short the front side of the move, you short the back side. And And so this is, it's caused by good news and a big short position. We traded a couple of those just the other day, where they had the big short position and we got the squeeze. But what this relates to today was the Jinko Solar, because somebody Dixie had posted and said that this looked like it was going to squeeze, and I said I doubt it because I think it's the backside of the move. So here you've got Jinko Solar goes from 16 to 90 in this. If I was a regulator, this would be the one I would be looking at for stock manipulation. This is so contrived, this chart, that it must be tightly held. I think it's a Chinese stock. So, this is a contrived position, a chart. This is a manipulated chart. But eventually it runs out of steam and they get off all their paper and it comes to and it sells off sharply, a little bounce. Here's where you're shorting the stock in the 70. You're not going to, you miss the 90, and you're happy with taking it at 70 because it's going back to 30. So this is the backside of the move. This is where you short it. Maybe it finds a bottom in here and goes again, but you don't want to short the stock. And this brings another point. If you short the stock here, and you might catch it, maybe you catch it for 50 cents or $1, something like that. But look at the risk you're taking. Why scalp the front side of a move like this when you can short it on the backside, and so make it 50 cents or $1 trade in here and take a lot of risk. When the backside of the move, you short it in here, and instead of making 50 cents to $1, you make $10, $20, $30, $40. That's why you short the backside of the move, because the trend is our friend. We don't, we're looking to buy stocks in this move, and we're looking to sell stocks in this move. Same with JKS. You could shorted this stock, and I'm sure people did, and they just kept getting crushed because it kept going higher and higher and higher. And maybe they scalped it for 50 cents or $1. But then look, if you had shorted it at 90 or even 70, you're up $10, $20, $30 rather than 50 cents to $1 trying to chase it or trying to short it on the way up. So that's what I mean by the backside of the move.